Welcome back. We've been discussing monetary policy with SBI Chairman Dinesh Khara, Samiran Chakrabarti of Citi, Mridul Sagar of IIM Kozhikode, and B. Prasanna of ICICI Bank. Gentlemen, thank you very much for your patience. Mr. Khara, I want to ask you about this fintech repository. This sounds like a very good idea. You know, the last time we heard of the repository was of those large credits, that Krillic, and it did wonders for the banking system. This fintech repository, do you think it's going to marry the fintechs and banks and NBFCs? Are we going to see a quantum leap in the use of fintech in banking?
No, I agree, because what has happened is of late we have seen exponential growth of fintech and also collaboration of fintechs with the legacy players. So what has happened is that they have got unfettered access to the consumer and the customer data. And there is a need to have some kind of a order when we engage with fintech. So if these fintechs voluntarily engage with this repository, this will bring in a lot of credibility of about the fintech players, and also the comfort of the legacy players on the performance standards of these fintechs also. So I think I would say that it's an excellent step which has been taken, because today when we talk about cyber, when we talk about data privacy, it is very essential that all the players in the ecosystem are mindful about their obligations, and they must live up to that. I think this is one step which will ensure that eventually all of them move in tandem, and which will eventually work for the good of the whole of the financial system.
I think we should get the governor on an interview, or Ravi Shankar on an interview, on what plans they have on this. But the cloud facility also, Chairman, what do you think? Is this only for small guys who are not able to build up systems like you and HDFC Bank and ICICI Bank? Or can this be an entire public facility? You know, like NPCIL and UPI, are they thinking of this as a whole public infrastructure, which means you can have uniform security, cyber security? You think that's the end plan?
Well, as far as the cloud facility is concerned, I would say that there's also a greater degree of reliance on the offsite centers for storing and managing all these homogeneous amount of data, which is being used by various entities. And also at the same time, the computing is actually going up quite a lot, and which will actually generate a whole lot of data. So eventually, I think to ensure that there are economies of scale, this is something which will happen. But at the same time, there was always a challenge in terms of the data privacy, how it is going to be protected. I think with the availability of this cloud facility under the aegis of RBI, that will really work wonders, and it will ensure that there is all the financial entities will ensure that data protection laws are implemented in its right spirit, and they will have the benefit of the security of the data too. So I think again, it's as a regulator, it's more of a path-breaking initiative which has been taken to bring the financial sector availing the cloud, and which will eventually go a long way in terms of the digitization of the economy.
Okay, those are separate chapters, and we will discuss that with you and other bankers separately. Thank you very much, Mr. Khara, for your time. Well, on more immediate market matters, Samiran, should we expect, do you push back the rate cut expectations?
I mean, on the margin, would say that the way the governor has put the forecast out, there is a possibility that the rate cut is pushed back a little. The key question is that whether we are right in forecasting a slightly lower growth, and on the back of that, a slightly lower inflation as we move into the latter part of the year. So just to give you a sense of numbers here, second half 2024, we think that average inflation would be trending closer to 4%, whereas the RBI trends it somewhere around 4.4, 4.5%. So if we actually get trending around 4%, then the real policy rate at that point of time becomes almost 250 basis points. And that might open up space for a small 50 basis point of rate cut in the second half of the year. And by that time, we will have more clarity on how the monsoon has progressed. We'll have clarity on whether global growth actually has gone into recession in US, Europe, etc., whether other central banks have started their rate cuts or not. So that probably is a good backdrop to think of a rate cut. But much before that, we need to see the sequencing of it, with first the weighted average call rate dropping from MSF to repo rate. Second, the change of stance from withdrawal of accommodation to neutral. Only then we can think of rate cuts.
Mridul, I have to ask you, 5.9 fiscal deficit plus 3% states. This is 9% fiscal deficit is seriously an economy on steroids. We have to bring it down, and my sense is that next year, in all fairness, we should bring it down to 5% or closer to that point. A 7% economy cannot get a fiscal deficit higher than that. And last time, from 2010 to 11, when we brought down the fiscal deficit by nearly 1 percentage point, growth fell by 3 percentage points. So, next year, if we really bring fiscal deficit down as we should, won't growth be affected?
Yeah, so Latha, yes, it can. The moment government seriously pushes fiscal consolidation, some growth sacrifice has to be there. As I told you today, I am at Hong Kong and was attending a seminar where actually the BIS people were very, very sort of aggressive on this front and saying that basically the fiscal positions in Asia are so much out of alignment that there's no option but to sacrifice some growth and bring about fiscal consolidation. And I'm totally in agreement with that view, because we need to create fiscal space in good point of time. But on the rate hikes, let me just add a caveat here, because see, I did mention last time that I see rate hike coming somewhat in Q2 of the fiscal next year, but the growth has been much sharper, and that has sort of pushed that aside. And there is a possibility that, and most people here in Asia are seeing India and Japan being two countries which might hike rates next year instead of lowering. Okay. And Japan might obviously dump the YCC and get out of the negative interest rate policies. Okay. And for India, it depends on how inflation and growth might shape.
Okay. Okay, that means all possibilities are open. It's best not to talk so much in the future, since there are so many, guesses to be made and so many things to unfold. Thank you very much, gentlemen, for parsing the current policy. The current policy is that it is as Goldilocks as it gets. We have got a huge growth number that the Reserve Bank has given us, and it is fairly restrained on inflation. So let's enjoy when the going is good. We wrap up on this special broadcast. Thank you very much for watching.